When you have lost a spouse and you have back taxes, especially when they're unfiled returns and back taxes, and when the income that created the tax problem in the first place is tied mostly to a deceased spouse, it is easy to assume that the best thing to do is to file the returns, get them all caught up so that you can move on. But that may be a problem because one signature on a joint return can change everything for a surviving spouse. I'm Deltrease Hart-Anderson, keeping the IRS out of the pocketbooks, wallets, and bank accounts of taxpayers. Welcome to this episode of Tax Problem Solved, where we are talking about filing jointly with a deceased spouse, what surviving spouses need to know. So I first want to say my condolences to anyone that is grieving, anyone who has had a spouse to pass away. Also, if you are a child that has had a parent that has passed away and you're helping a mom or dad navigate this time as well, again, my condolences. I also want to congratulate you on being able to take action whenever you're taking this action. I know that you're grieving, you're overwhelmed, you're trying to clean up old back tax issues, and that's some overwhelm, or there could be overwhelm in that as well. So I thought this topic was very time sensitive. I know it's just a sensitive topic anyways, but it's so important. So again, this is for the widow, the widower, the surviving spouse, even a child helping mom or dad clean up their tax issues. And honestly, because I know a lot of my colleagues listen to me, this honestly is for you as well, for any attorneys and tax preparers, any CPAs, IRS enrolled agents, anyone, financial planners, advisors, anyone who's helping families when somebody passes away. This is for you because when someone dies, the tax problem does not always die with them. And if you're not careful, one filing decision can make a tax problem that may have belonged mostly or entirely to the deceased spouse and tie that surviving spouse to problems for years. So I'm not going to talk about a specific client by name, but this podcast was inspired by someone I recently spoke to. So this whole situation reminded me of why this topic is so important. So her husband had been sick for several years and eventually passed away. During that time period, most of the income that was coming into the household was from his retirement. They had unfiled taxes, they had back tax issues all along. Before she came to me, she went to another professional, an attorney, and one of the things that happened was that the tax returns were filed, all of them, as married filing jointly. Now, let me pause right here. Married filing jointly may be the best answer in a whole lot of situations because it's going to give, in most cases, the couple will have a lower tax balance. You might have better tax rates. It may allow certain credits or deductions that are limited or unavailable when filing separately. But when there is a tax debt, if there are unfiled returns, when a deceased spouse is involved with prior year tax issues, retirement income, now you're going to add on top of that illness, and a surviving spouse who may not fully understand what is being signed, you don't just automatically file a married filing joint return. This is when the whole tax situation year by year needs to be analyzed. You need to breathe, slow down, look at each year involved. You want to look at the income that was created and whose income created the balances. You want to look at whether the debt is connected to the deceased spouse, the surviving spouse, or to both spouses. You want to look at whether married filing separately would protect the surviving spouse from being personally responsible for tax debt that may have been connected to the deceased spouse. And you explain the difference before anybody signs anything. Just don't sign, okay? Because once a joint tax return is filed, that surviving spouse may now become connected to that tax liability. That doesn't mean that there aren't any other options later. And there could be some spouse relief options. You could amend the returns. There could be some penalty abatements, all the things. There are a few other things, other strategies, depending on the facts, right? But hear me out. It is much better to prevent the problem than to try to undo the problem later on. So that's pretty much what this episode is about. The lowest tax number is not always the best tax number. Sometimes the better questions that are asked, or the questions should be, which filing status gives the lowest balance? Yeah, that's one. But which filing status protects the living spouse? I feel that's the main question. That's the biggest question that needs to be answered. That is especially true when the surviving spouse is already grieving, overwhelmed, trying to make sense of financial issues, trying to make sense of their old tax life as well as their new tax life. Sometimes they may not have been the financial person in the marriage, okay? So let's break this down, because when a married couple files a joint return, both spouses are generally responsible for that return. That includes the taxes shown on the return. That includes if the IRS says, hey, no, this isn't the right answer. Here's some additional taxes. That is also going to include any penalties or interest that may later be assessed. So that is why a joint tax return could be most dangerous when one spouse had the income, one spouse controlled the money, one spouse handled the tax life, or one spouse had tax issues that the other didn't understand. Now you're adding death to the mix. The surviving spouse may be sitting here thinking, hey, I'm just trying to get these tax returns filed. I'm trying to clean this stuff up. I'm trying to do what's right. And I'm just trying to move on. They may not understand that by signing a joint return, they could be accepting responsibility for a tax debt tied to income that they didn't control, retirement they may or may not have benefited from equally, or years where they focused on caregiving instead of finances. So that is why I believe, especially us as professionals, any professional helping taxpayers in this situation, you have a responsibility to do more than prepare a tax return. I'm getting on my soapbox just for a little bit. But if you're a tax professional out there listening, you need to do advising, explaining, comparing. You need to ask the hard questions. You need to ask questions about where the income sources, how was the income earned, who earned the income, were there any withholdings, estimated tax payments, self-employment taxes, all the things. You need to ask that. You need to know if the surviving spouse knows that the taxes were filed or were not filed. You need to be very involved. Were they dealing with illnesses, the caregiving, the funeral planning, estate issues, all the things? I could go on and on, tax professionals, but this is not about you. This is really about determining whether married filing joint or married filing separate is the best option. Because remember, this should be a decision, not married filing joint being the default. There is a difference, and you all know this out here. There's a difference between preparing a tax return and solving a tax problem. Yeah, the tax prep for filing jointly it's going to be cheaper, of course, but cheaper for who down the line and at what cost? Because if married filing joint is going to save a few $1,000s on paper, but makes that surviving spouse responsible for a debt that could follow them for years and years and years, is that really the cheaper option? Was that really the better outcome? That's why analysis matters. So I'm off my soapbox right now. I'm going to speak directly to the surviving spouse. If your spouse passed away and there are unfiled returns, you have IRS notices, state tax notices, retirement income, business income, old tax debt, please do not let anyone rush you into signing a joint return without explaining what that means. Ask some questions. What happens if I file separately? Am I becoming responsible for this debt? Was this tax caused by my income, my spouse's income, or both of our incomes? What happens if I can't pay it? Are there options to protect me? And if whomever you're asking those questions, if they cannot answer those questions, that's a sign you may need to get someone else involved, because tax resolution is not just about filling out a tax form. It's about strategy. It's about protection. It is about understanding how the IRS looks at liabilities, collections, penalties, interest, your filing status, your taxpayer rights. And when there's a deceased spouse involved, the tax professional needs to be even more careful, because that surviving spouse, you as a surviving spouse, you're grieving, you're exhausted. You may have spent years as a caregiver. You may not have been the person who handled the finances. You may be walking into a mess you didn't even create, you didn't understand, you don't know how to fix. So now is not the time for lazy work. It's not the time for automatic filing. It's not the time to say, well, let's just go the cheaper route. What is the cheaper route? No, this is the time to slow down and protect the person who is still here. Now, let me say this. You may have already filed a joint return with the deceased spouse, and now the IRS is coming after you. Don't assume there is nothing that you can do. There still may be options. You might be able to request some sort of spousal relief. You might be able to challenge penalties, which will reduce the penalties and the interest. You may be able to set up a resolution that fits your financial situation. You might even get the IRS to pause collection while your case is being reviewed. You do have a whole lot more options than you think, but you need to get the situation reviewed by someone who understands tax resolution, not just tax preparation, because this is where people get hemmed up. This is where they get hurt. You need to go to someone who can prepare the return, but that person needs to think about collections, okay? They need to think about liability. They need to think about whether the IRS can levy you as the surviving spouse. They need to think about how the filing status impacts your tax debt. Look at the whole picture. That's what they need to do. And that is how you as a grieving spouse ends up with a tax problem that could have been handled differently from the beginning if they're not looking at these things. So here's my takeaway for today. When someone dies, and there are tax problems, do not assume the surviving spouse should file jointly. Do not assume the lowest tax balance is the best answer. Do not assume that every attorney, CPA, accountant, tax preparer, even IRS enrolled agent, don't assume that they understand resolution. Do not sign a tax return without understanding what you are taking responsibility for. And please, 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 when grief and death and illness and back taxes and unfiled tax returns are all lumped together, get someone who knows how to look at the whole picture, because the goal is not just to file a tax return. The goal is to protect you, the surviving spouse. The goal is to keep the IRS from creating more financial harm to you, surviving spouse. The goal is to solve the problem right away. And if you're dealing with unfiled returns, back taxes, IRS letters, or a state tax issue connected to a deceased spouse, any of those connected to a deceased spouse, this is exactly the kind of situation where you need a tax resolution before you make another move, because one signature on a married filing joint return could change your whole life, surviving spouse. That's all I have for you guys today. Again, my condolences and congratulations, all in the same breath. I'm Deltrease Hart Anderson, keeping the IRS out of your pocketbooks, wallets, and bank accounts. I would love to have a conversation with you. Let's see if we can navigate this together. www.callthetaxpro.com. That's www.callthetaxpro.com. Till next time, bye y'all.